Very good evening, viewers, and thanks so much for staying with us here on India Today. You're watching the Business Today show with me, Jyotiraditya. Let's begin with the top news. Good day of the trade as SPAG and buying drive indices higher. Sensex surges 242 higher to close above 61,000 levels. Nifty breaches 18,000. India takes off with an aim to dominate global skies. A whopping multi-billion-dollar deal inked by Tata's Maharaja Air India for 470 planes from aircraft makers Airbus and Boeing, the largest one seen in modern aviation history. Speaking at post-budget summit, Finance Minister Narendra says the government is focusing on public expenditure to propel economic growth. On the question of getting petroleum under the GST, she says it could be possible if there is an agreement amongst the states. CBDT notifies new tax filing norms, new modifications including allowing individuals to file revised returns on undisclosed wealth under Section 153C. The said move allowing taxpayers ample time to prepare for relevant disclosure. Air India seals record order for 470 Airbus and Boeing jets in a massive deal that experts claim may be valued at over $150 billion in entirety, making it the largest commercial aviation history in the whole world. Here is more on the deal and how it promises to change the Indian aviation sector altogether.
The salt-to-steel conglomerate owned by Air India will buy as many as 470 planes from Airbus and Boeing as the former national carrier embarks on a brand new journey to reclaim its glorious past. The airline has placed an order of 250 planes with European plane maker Airbus and 220 planes with American giant Boeing in the world's largest ever single tranche aircraft purchase. It has the option of purchasing 70 more planes, taking the total to 540 aircraft. Considering that India currently has less than 900 aircraft in operation, the Air India deal promises to reshape Indian aviation and the customer experience. Let's understand the nature of this deal. Of the 250 planes from Airbus, the carrier has chosen as many as 30 AN350 aircraft. The model promises to be the centerpiece of Air India's long-distance strategy that promises to connect the global Indian diaspora non-stop between Indian cities and overseas locations. A majority of the aircraft are single-aisle planes that will fly to domestic destinations and short-distance international destinations. The rest will fly over long distances connecting Europe and the Americas. Aviation consultancy CAPA estimates go as far as to say that Indian carriers are likely to place orders worth 1,700 planes by 2024. Currently, Indian carriers operate less than 50 wide-body aircraft, an insignificant number for a widely significant market. On the flip side, Arab carriers Emirates alone has a fleet of over 260 wide-body planes. Centering our focus on consumers, India's aviation market is on track to hit pre-pandemic levels, leaving Indian carriers gasping for breath as they struggle to meet surging demand. The deal comes at a time when data from the Directorate General of Civil Aviation shows that the Indian aviation market surged as much as 47% to 123 million passengers last year. The first aircraft to arrive will be 25 brand new Boeing 737 MAX planes and 6 Airbus A350s in the second half of 2023. With deliveries really ramping up in 2025 and beyond. And it's not just this. Tata Sons chairman N Chandrasekaran has hinted towards bigger things, including an ambition for commercial aircraft manufacturing at some point in time in the future in India. Bureau Report, Business Today TV.
We at BTTV took it up with experts to understand the contours of the biggest ever aviation deal and the impact it's expected to have. With experts, my colleague and Business Today's managing editor Siddharth Zarabi caught up with Mark Martin, the founder and CEO at Martin Consulting, and aviation expert Jitendra Bhargava. Here's a slice from that conversation.
I think the important thing to understand is that India, from our commercial airline fleet perspective, after Jet Airways collapsed and prior to that Kingfisher, our fleet is already in a negative by roughly about 300 aircraft. And despite Indigo's growth in terms of fleet, we really haven't been able to replenish the lost fleet from our capacity. Air India's deal for Airbus with Airbus and Boeing not only replenishes our fleet but also brings in a whole new level of product freshness with our airline service offering. And from a strategic perspective, this becomes a very tactical step where Air India would be going head to head and competing with most Gulf carriers, including Emirates, Etihad, and Qatar Airways, because now Air India has that unique Swiss knife capability of flying ultra long range with a very good product offering.
By when do you expect these aircraft to be inducted into the Air India fleet?
Air India should be very lucky to get the first few aircraft by July this year. We're looking at a 6 months delivery at least for the A350 and maybe a few Airbus A320 or 321 Neos. In terms of optimal capacity deployment, the current fleet of Air India is roughly about 140 odd aircraft. So the current fleet plus the new inducted fleet, which should come in or rather start trickling in by June, July, August, we're expecting this to continue till about at least 18 months from now. So by 2024, June, July, August, we should see Air India with a good 350 aircraft in terms of commercial deployment, which includes its existing fleet. So I think eventual full saturation of the 470 aircraft plus whatever that's remaining, the 787s, we should see that by around 2026, 2027.
One of the things that a lot of people are asking, what does it really do to airfares, at least if not in the immediate context, but in the medium term once these aircraft are in, because we have been experiencing high airfares, especially in the domestic context.
So with Air India, the key focus is going to be looking at an international network and focusing more in terms of its global position, getting back to where it was as an iconic airline and being amongst the top 5 airlines in the world. So while the Airbus A350 would be deployed aggressively internationally on ultra long haul destinations and routes, we must be also mindful that Air India has bilaterals with practically every country, including exotic destinations as the French Polynesian Islands, Tahiti, Brazil, Argentina, Mexico, and several others. So Air India will want to deploy its long-range aircraft. The new inducted or the fleet that they intend to get as part of the new order promises about 28 to 30% of lower operating costs. This means lower fuel burn, lower carbon emissions, higher reliability, much more simplified, lower maintenance tasks, and a very high level of airworthiness. So the ability to fly more, fly longer, and fly further. So all of these, when added up, should bring down airfares, and the Airbus A320 and the 321 LR fleet, which Air India expects to deploy locally within our region. When I say our region, I mean the region that extends from possibly Mauritius, Maldives, Malaysia, Indonesia, Vietnam, Cambodia, and Singapore. That entire footprint with the new aircraft that's being inducted should bring down fares to a reasonable balance.
On the fares question, because this is a pressing concern for a lot of people, especially after the COVID era caps were lifted. It's the question that a lot of people are asking is, how does this get sorted? The fact is that aviation fuel and its prices plus the taxation levy is outside of an airline or an airport operator's capacity to impact. So would it be fair to say that airfares in India need to be controlled through other means rather than just inducting more capacity?
You know, we need to divide the international travel and the domestic travel. International travel, we got to look at from the perspective of the war, the ATF prices, shortage of capacity, because when COVID came in, a lot of airlines gave VRS to their pilots abroad, and they're finding it difficult to get all the fleet into operation. That's the one part of it. And plus, many of the airlines abroad cannot overfly Russian airspace. That's the first part of it. When you look at domestic, there are two other things that we needed. Number one, it is not just ATF. Dollar and rupee, the rupee depreciation vis-a-vis dollar. Most of the prices or the costing of an airline are dollar designated. So it is also having its bearing. And what we overlook, the fact is, we blame the airlines more often than other thing, is the fact that state governments charge sales tax on ATF up to 25% at times. So what my recommendation to media would be that please look up the breakup of the fare that a passenger pays. All of it does not go to the airline. There is a security cost attached, there is airport cost attached, there is a fuel surcharge attached, and various things that gets onto it. And that is what makes it. I'm not disputing for even one moment that the fares are high. So what we witnessed in December, as the results of Indigo show, that 15 crores profit per day is what they made in the October-December quarter. But let us not also overlook the fact that in the April-June quarter of 2022, they made a loss of 11 crores per day. Look at the swing of 26 crores per day that Indigo witnessed. And it wasn't that the management had to do anything. It was the pricing of fuel. It was the load factor that they could achieve, 90% plus in December month, vis-a-vis 70-75% in the month of April, May, June. So if more people travel, more capacities in the market, and the attention of the media is not concentrated on airlines alone, but also on the state governments who are greedy, who put 25% sale tax, which is ad valorem. So as the fuel prices go up, their income goes up, and nobody questions them. And airport charges are also going up because of the new airport, the investment that are taking place. But it will take time to stabilize. But what I would say is very clearly is that growth must be looked at, because if the growth comes in, capacity deployment comes in, the competition is there, the fares stabilize on their own.
The Dow Street picked up pace at close after a lackluster opening on the back of US inflation data. Indices staged a recovery largely aided by IT names. Meanwhile, foreign investors continue to chart their return into Indian equities. Both benchmarks clocked in gains of nearly 0.5% each. Nifty reclaiming those 18,000 levels on your screens right there, 18,016 to be precise. Sensex surging 240 points up to settle above the 61,000 mark. It was the day of the mid-caps that closed with gains of 0.7%. Amongst the gainers, we had names like Tech Mahindra, Apollo Hospitals, Eicher Motors, Reliance, Bajaj Finserv. On the losing ends now, let's bring you the top Nifty losers on your screens. It was FMCG major HUL taking the top spot, which was followed by stocks like Sun Pharma. You had ONGC, L&T, IndusInd Bank right there on your screens at the moment. Mahindra Holidays Chief Operating Officer Santosh Kuti says that the company plans to invest 1,000 crore rupees across the country in the next 4 to 5 years. He also explained what the budget announcements entail for the sector. Watch this exclusive interview with BTTV's Chetan Bhutani.
Uttar Pradesh is a very big market for the tourism community. What are your plans for the state? You have been investing very heavily here. How do you see at the state of UP and the investments particularly, sir?
So, we haven't invested yet in UP. Our members do have resorts where they come to. We intend to invest in UP. UP, in my view, is like we've been talking about the whole day, the biggest market in India with 25 crore people. It also is has the highest domestic tourists coming from the country into India. There's no reason for us not to invest. So we are looking to invest ourselves. We are looking to partner with other projects, other investors. We are looking to partner with the government. So the intention is over the next few years, we at least do say about 2 resorts in India, in UP, and partner with others and create more experiences, resort destinations around around the state.
The tourism sector is one sector which has been consistently seeking support from the government. The government, on the other hand, has also given its best what they can, but more needs to be done. So, Mr. Kuti, I would like to ask you, UP is giving that help to some of fiscal incentives, non-fiscal incentives. What else do you think can be done to further boost the sector in the state?
So my view is UP today, the tourism policy and the incentives that have been unveiled is probably one of the best in this country. The question is if we can execute it, in my view, and execute it well. If we can execute it well, it would go a long way in turning around, should I say, or increasing multifold the tourism prospects in this country, in UP. So it's a case of synergies with the private sector. It's a case of investment by the private sector. It's also a case probably of investment by the state, in addition to the incentives, which should draw out more and more tourists to this place.
Right. Last question to you. How much amount would you think the company would invest in building those 2 resorts and partnering with other partners? Could you give us a number there? And
we're not revealing we don't see. We are waiting for. We are actually evaluating right now. We are trying to understand what we could be doing, how we could be doing. We are very keen ourselves. So the intention is, let's figure out how we can do, where we can do, how much can we do. Correct? The intention is not to put on a number. The intention is, see, for every 100 rooms that we invest in, or we work with other partners, we can bring in about 25 to 28,000 tourists to the state every year. That's the potential.
Right, and the budget was seemingly okay-ish for the sector. Few misses, few hits, yes, but how's the demand going for the sector? The room rates we've been seeing these days are an all-time high. It's a good news for you also. How do you see the sector going forward with the national tourism policy also in the pipeline? So give us a perspective, sir.
So see, obviously pandemic was a big hit for the industry. The industry has bounced back to almost 2019 levels or pre-pandemic levels. Leisure has really exceeded probably pre-pandemic levels already. So there's a huge amount of demand, and we expect that demand to grow in the next 5 years. From a supply point of view, we are a little worried that the supply might not be that much in the next few years. So the demand should exceed supply, and that really means good times for the industry. As far as Mahindra Holidays is concerned, we consistently are doing about 84-85% occupancy. We continue to expand rapidly. So that remains, that continues. We continue to be focusing on our growth.
And what's next in pipeline at Mahindra Holidays?
Lots of resorts coming up all over the country. We are investing. I think we have announced the investment. Our managing director already announced an investment of about 1,000 crores in the next 4 years. So that goes into building resorts all over this country. Greenfield, brownfield, expansion, quite a few of them coming up.
Despite substantial rate hikes done within the last months, the likelihood of a further rate hike cannot be ruled out completely. So now, given the scenario, should investors increase the allocation to bank fixed deposits? And what can the best fixed deposit income products do for the common man? BTTV's Sakshi Batra caught up with personal finance experts Vishal Dhawan, the founder and CEO, Plan Ahead Wealth Advisors, and Tina Jain Kaushal, editor, Money Today. Here's an excerpt of that conversation.
I will always say that one should invest in PPF because PPF has many tax advantages, and I tell you what these tax advantages are. First of all, PPF gives you 80C deduction, which is not available in case of many other instruments. Like in FD you have to do, the tenure has to be 5 years, but here every PPF investment has 80C deduction. Then the most important part is whatever interest you get on PPF, it is tax free. no other instrument in my knowledge currently is giving interest which is tax free. So that's the one major factor for PPF, and the effective yield, effective interest rate, therefore in case of PPF may be higher than the FD rates. So definitely PPF is one thing you should have in your portfolio. You should invest every year. In fact, April 1 is coming, so before April 1st, if you invest 1.5 lakh in your PPF, you can get the maximum interest advantage for the overall year. One thing is FD, as I said, it's taxable, and in case of time deposit also from post office, the interest element is taxable. So PPF is therefore has an advantage, and one should have it in the portfolio. And again, in the case of PPF, you have this provision where you can extend it even after 15 years. So after 15 years, you can continue your PPF. It's not that the tenure is limited to 15 years. So after that, every year you can make a withdrawal. So that way, the liquidity is good after 15 years. Before 15 years also, liquidity is there. But certainly, PPF has many benefits.
Okay, Mr. Dhawan, would you also weigh in on that, on PPF? What if the government's now focus is to make the new tax regime more attractive? They want the entire population sooner or later to completely shift to the new tax regime. Once the attractiveness of deductions really goes away, will this still hold an important investment tool for investors?
So I think there are two elements, like Tina was mentioning. One is the tax benefit that you get when you make the investment under Section 80C. And that certainly will not be an attractive proposition, if someone does end up opting for the new tax regime, or that becomes the sort of preferred route for everyone as we move forward. But clearly the exemption available on the interest component still makes it a very, very attractive option. So I would say that, as long as you can put away your money for the long term and fixed income, even without the tax benefit at the time of investment, it's a very attractive proposition for those in the higher tax brackets. Sure. I think it's very, very important to distinguish this. I think what tends to happen is very often, one looks for fixed income solutions and assumes that they are the same options for everyone. But clearly PPF as an option is much, much more attractive to the people in the higher tax brackets, because that 7.1% is actually a much higher pre-tax number.
The Twitter CEO Elon Musk announced that his pet dog is the new CEO of the microblogging site Twitter. Musk shared a picture of his pet dog, Shiba Inu, named Floki, sitting in CEO's chair wearing a Twitter branded t-shirt. In a series of tweets, Musk also expressed his admiration for the new CEO, who he believes is a better CEO than the other guy, by which he hinted either at himself or the former CEO Parag Agrawal. On the other hand, while speaking at the World Government Summit in Dubai, Musk said that the end of 2023 is going to be good timing to find someone else to run Twitter.
I think I need to stabilize the organization and just make sure it's in a financially healthy place, and that the product roadmap is clearly laid out. So I don't know, I'm guessing probably towards the end of this year would be good timing to find someone else to run the company, because I think it should be in a stable position around at the end of this year.
Well, that's all that we have for you on this edition of the Business Today show. Keep watching India Today. This is me, Chaiti Narula, signing off. Thanks for tuning in. Thanks for your time. Have a very good night.